This is Money from bsc2nse.com. So in this video, we are going to talk about Bollinger Bands and how to use them and some of the basics of Bollinger Bands. So, uh, you just go to google.com/finance. This is very useful for and at the top you can search something like, let's say, Bank Nifty. As Bank Nifty has more volatility, I think it's more suited for Bollinger Bands and even for Nifty actually. So I'm gonna show you here Bank Nifty. Uh, so here this is Bank Nifty for you. So and I've selected on my technicals. Here you can pull down Bollinger Bands in this, something like okay. Yeah, here you have many indicators. You can just select any indicator. So select Bollinger Band. I've selected Bollinger Band, and I'm using 21 as the parameter, which means it will take 21 candlesticks. And you have the settings here, and as you can see, I have the settings as candlestick and default interval as 5 minutes. So once you get in candlestick, you can also have default setting as 30 minutes or daily. So that is up to you. So all you have to, once you put in the settings, what you're basically getting is let me show you the 30-minute. So when we say there are various time intervals here, 2 minute, 5 minute, 30 minute, it means that each of these candlesticks represents the respective time frame here. Meaning when I select the 30-minute chart, one candlestick represents the 30-minute time period in the stock market of trades. So when I select 2 minute, this chart is the intraday chart from morning 9 a.m. to 3:30 p.m. When I select the 5 minute chart, it's actually again showing intraday for the last 2 days. And when I select 30-minute chart, if you look at here, it's December 30. This slab is December 30. This is December 31. This is Jan 1st, Jan 2nd. So there are like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So there are 10 days of data in this particular chart. So 30-minute is a little wider because the single candlestick has 30 minutes. And when I check the daily chart, it'll be actually every month. The each segment that you see here is July 2013, August 2013, September, and so on. And when I select weekly, it'll be even more. So this time there is actually 2.5 years of data here. So 2012, 2013. Okay. So typically, let me explain what the Bollinger Band is. So when I say the parameter 21, it means it will calculate Bollinger values based on the last 21 candlesticks. So when you select the weekly chart, it will assimilate the data for the last 21 weeks. When I'm looking at the daily chart, it's going to be assimilating data for the last 21 days. So when I look at 30-minute, so 21 into half an hour is like 10 and a half hours. So it will be looking to assimilate data for the last 10 and a half hours. And for 5 minutes, it will be last close to 2 hours, 105 minutes. For 2 minutes, it will be just assimilating data for the last 40 minutes of trade. So you need to choose the time frame based on what is the trading time period that you're looking at. Typically, I don't actually believe that 2 minute and 5 minute is actually going to be beneficial because the movement is going to be lesser. And for intraday, I actually believe that 30-minute is the most ideal time period because as a retail investor, as somebody who does not have automated trading softwares, and you should know that retail investors are not allowed to do automatic trading. So without these kind of support, I don't think you can succeed in 2 minute and 5 minute. And I think for retail traders, it actually makes much sense to use the 30-minute time frame. And I'm not going to share a lot about the trading strategies here. Uh, this actually, I'm currently using Bollinger Bands in combination with one of the analysis that I did on end of the day on Bank Nifty for the last 9 years, a systematic behavior in Bank Nifty. So I'm using that to pretty good effect, and it's actually working out well. So if you're interested, you can just join the Zerodha family as my client in bsc2nse.com, and you'll get those trading strategies for free. So let's get back to this video on Bollinger trading. So basically what happens is, what Bollinger Band is, based on the time frame, it will assimilate the data for the last 21 candlesticks, and based on the data it will calculate the volatility during that period. It will also calculate the median average EMA line or EMA sort of line. So it is nothing but you can see three lines here: the green line, the blue line, and the red line. The blue line is the median pivot value, or the pivot value of the, or the mean value of the last 21 candlestick sessions. And you have two bands. The upper band is the green band, and the lower band is the red. And when I point my indicator here, you can see the mid values, lower values, and the upper values here. Okay. So what these, if the volatility is high, if the movement is high, the upper band and lower band will expand and actually move out. And if the volatility is low, like you see here, it's been just, markets are like very stable or like moving with a very less volatility, at that time these lines will be closer. So most likely what tends to happen in the stock market with the Bollinger Band is, the markets, when they are range bound, they will look to just fluctuate between the upper band and lower band. So a simple trading strategy is, when it is close to the upper band, you go short, and when it is coming close to the lower band, you cover your position. Or the other way is, you take the pivot line. Whenever the markets are falling below the pivot line, you look to go short, and you can book profits when it is touching the lower line. The other way is, you go long when it is crossing the pivot line, and you look to cover your positions when it is hitting the upper band. So these are simple stuff that people do. Normally what I share with Zerodha clients is, I share more insights on how more effectively to use it based on the systemic behavior that I said. So right now, there are two things. You can also have a breakout, meaning it doesn't mean that always you shouldn't get into the mistake that some people believe that you may always be, the markets will always fall from the upper band. But that is not the case. Like you see here, it breaks out of the upper band, and it actually breaks further, and you may also see huge rallies sometime which will just totally break out of the band. So you will have those kind of cases also, wherein a breakout may happen. But of course, a breakout, if you look at it, let's say 10 times when the markets are coming close to the upper band, a breakout may happen only on 2 to 3 times. So mostly you have a higher possibility of markets being range bound than markets looking to break out. Market breakouts or market rallies or market complete bearish movement on the downside will happen very rarely, or relatively at a lesser probability. So there is higher probability where the markets will just stay range bound between the upper band and the lower band. So most people, the simple way that they use the Bollinger Band, especially the 30-minute for intraday or very short holding period, people look to go long once it crosses the pivot line. Once it crosses the pivot line on the upside, people look to take a long position and cover close to the upper band. Similarly, they look to go short when market dips below the pivot line from the upper band, and cover it when it kind of reaches the lower band. So that is a relatively good strategy to do. And for long-term investors or long-term people who are trading in futures or options with a relatively longer time frame, you can go for the daily chart, and these will give you the pivot lines like the upper band, the middle line, I call it the pivot line, and the lower band. So basically these will give you the upper resistance levels and these lower support levels and the intermediate pivot levels. And this is what basically you hear in TV and media as well, people telling you like market are range bound. Okay, if I click on the weekly currently, and if I go to the top right, you can see that the mid range is 10,485, the lower is 9,045, and the upper is let me take Nifty because most people on TV talk about Nifty. If I go to the weekly chart, and if I go to the top right corner here, okay, I just point my mouse on the rightmost candle there. So on the left center here, I can see these levels. So when I point my mouse on the top right, you can see that the lower level is 5471, that is shown in the middle. The mid pivot line is 6008. The upper is 6545. So mostly you can hear people saying on TV that the Nifty range for 2014 is 5500 to 6500. So basically even the TV market analysts look at these values and are only going to tell you that. So it's rather better to have your own insights on looking into these analysis. Try to understand the market behavior and see how best you can do. For long-term investors, definitely you can look to invest whenever the markets are coming into the lower band, like here, especially when you know that the long-term trend is positive. But in a 2008 like bearish kind of market, it will break down further lower and it will keep going down. So if you want to know about how to predict market falls like 2008, read my book on art of stock investing. But currently the long-term trend is pretty stable. So in a stable kind of economy or in a stable kind of market situation, you can definitely expect to buy in when the markets are coming down to the lower band. You can enter. You need not exactly try to find the bottom, but you can try to invest for long term whenever markets come into the lower band zone for sure, or even close to the pivot line, I would say. So I think I've given a basic brief on what Bollinger Band is. So I'll try to make more videos on some more technical analysis. Subscribe to our YouTube channel so that you stay in touch with us. You get to know of the videos that we make, which I believe should be useful. And you can follow us on Facebook at facebook.com/bsc2nse.com. And like I said, I share a lot more insights with Zerodha clients of mine. So if you're looking to join the family, you can log on to bsc2nse.com and fill out your form of interest. That's it for now. Thank you.